Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and boy, what a crazy day in the metal markets today. And this is Wednesday, September 7th, 2011 is, and we're getting on to about 2:50 in the afternoon. I want to start out by reminding everyone I begin my live chat rooms on Thursdays, not tomorrow, a week from tomorrow. I'm still finishing up the charting course, and I am doing a new charting course full. Every chapter is brand new, new ideas in it since the last course, and I need the time to finish that up, and I think this is a good week for me to be using that time and into next week. And my idea was to have the course ready to go at the end of the month, and I think I'm still on target. What happened with the schizophrenia market? Why did gold suddenly go down from the high tonight of 1883 to 1793? Whoa, what a break. Well, if you read my twice daily updates last night, I gave you two choices. In the update, and this is published, so I feel very comfortable with all the regulators and so on, I said, you know, the market's run into the Bollinger Band. For many of you, this might be the area to just step out of the market, take a fresh look after the president's speech. If not, you don't want to see the market get under what I call the break-even including area, including commission, from where, via my recommendations, you were long. And as it turned out, it worked out fairly well. Let's put it that way. In fact, very well. So now the question isn't anything other than what next, and we're going to get to that. A lot of this crazy action began with the, as you know, Swiss National Bank stepping into the Swiss franc, and that's what this is. And while it's up 31 today, remember, this is a market that was just in the 140 area recently, so it's down about 9% in a day and a half or so. The euro is obviously well over. It's 140.93 versus 116, about a 23-cent difference in the two markets. Now, the beauty of the Swiss franc had been, and the word is had been, that it was one of the safe havens that people would run to because of how the country was run, its expense-to-debt ratios, how their policies went. Everything worked. What happened is because the country's currency got so strong, the industries of the country started balking, and they found themselves at a competitive disadvantage. So they step in and they artificially drop the currency value by what? By, if you will, getting rid of their currency and stepping in and buying the euro, dropping the difference between the two. Just think of it that way. Intervention is nothing new. What would be new is that it works. It cushions a blow for short periods of time. But ultimately, the market is bigger than a central bank. So you start watching these markets to see when, where will it go against it. Now, could the Swiss have got it right and world events turn in such a way that magically there's no more sovereign debt issues? People are very comfortable owning the euro. They really don't need the Swiss? Of course that can happen. Do I think it's happening? All they're doing is debasing their currency the way that we in America did to the dollar. Remember, we used to have a dollar that was over parity with the euro. It's not that way now, is it? And that's what you do to help your economy, I guess. Behind me is a chart of December gold. And in the gold, we went up just yesterday, made a new all-time high, and today the house comes crashing down. Or was it today? I think it was yesterday that the market threw out its signal that it couldn't hold that rally. It actually closed lower. And if you look at the chart today, it's more than interesting. The market took out 1813.16. Why is that important? Because prior to today, that was the last break low. The pattern had been one of a high that was higher than a previous high, and this break low, the apex of it at 1813.60, was higher than this low in the 1705 area. Then you get today's action that takes that out. Okay. So the pattern is one now of a higher high and a low that is lower than a previous low. Now follow my hand. You've got your wedge going up this way, and now the bottom of the wedge is looking for wherever it's going to find that support. One of the areas you see me often put on the charts here is what I call the line in the sand. It's the 18-day moving average of closing prices, and it's right here. That number's 1815.40. Market is right now 18, 19, 19. I don't care what the market does. It fell to that number, and just like a magnet, it stopped. That doesn't mean it can't go lower. It means that the market is paying attention to its first support zone. For those of you that are crazy bulls and you're just bullish as can be, you'll also say it did it back here and then it ran up to new highs. I can't argue with that. But you did take out the momentum of the market today by breaking that low. And when you did it back here, you did the identical thing, and then the market rebounded right through here. This was the last thrust, and this was actually where I was telling customers from here was where I was measuring up. Why did I look at the area yesterday as important? Well, I'll show you in a minute. You know that you don't have resistance from the longer term average, the 45 and the 100. They're under the market, so they can't be it. So I go to the algorithm I so often bring up here, and it's called a Bollinger Band. And the Bollinger Band is made up of these two black lines. They use two standard deviations from a mean in the formula, and you can get the formula on Investopedia if you want. And the idea is that a market, whatever it is, a chart, will trade within the bands 95% of the time, which means 2.5% of the time it can be above it or below it. Got it? I interpret this a bit different. And I say that if you're in a bull pattern, the first time the market hits that band is an area to take money off the table, in addition to your other tools. If you're bearish, the first time the band hits the bottom, same thing. This market hasn't hit a bottom of this band since way back here in June, just to give you an idea how bullish it had been. So yesterday when the market hit the band, all of a sudden it couldn't hold a gain. You had a reversal, not quite as severe as this reversal, but you've led into a similar pattern. You went from here in the 1905 area to 1705. You went here from 1923 to today, 1793. Not the same size break, so maybe there's some more room on the break. If it is, I'm going to look at wherever this Bollinger Band comes in, and currently it's 1728, about $100 from where prices are, is one of the potential areas. Right now, the area I'm targeting is here. That doesn't mean that I'm telling you to go out and buy. It means that's where I see support. What else has the market done? The market has alleviated an overbought condition. Now, you're going to say, what do I mean by that? Let me back up the chart. Yesterday, the reading on stochastics was 72.81, and right here was 64. Any reading over 70, you get into the bearish territory. You hit the Bollinger Band, you got a 72 reading, bang. You could argue with me that that same thing happened here, but here you had an embedded stochastic, and that's what kept carrying the market, and eventually when you lost the embedded part, you went back to the 18-day average. You don't have that to work with right now. You've already hit the 18-day average back here. So all that I'm seeing on the market now is correcting an overbought condition into an area of potential support in the 1815 zone. The silver chart is so darn similar. The market goes up, challenges that zone. When it took out 41.20, it took out the last break low, so you got a higher high, and today's low at 40.38.5 is lower than 41.20, so you're widening out. You're in very neutral territory, and magically, you're holding that 18-day average of closes that you did here, that you did here. So I think we're in a value area where the market's got to prove itself. Now, the market that gets a lift out of all this is copper. And I think it was just yesterday, and I'm going to say it again. I look at this sideways action right here as the support action that China maybe was accumulating some copper here, but I don't think they were buying it on the rally. Go to my tapes. I've been saying this. So you pull back to the 18-day average, and in the process, you've got a higher high and a lower low than a previous low, and you're correcting an overbought condition. Today you get a bounce in the market back over the 18-day average, but so what? You've got the pattern still of a high and a lower low. You're fighting near the 18-day average. So what I think in all the metals right now, they're not tradable right here. I think the markets are in a pause area, and that makes so much sense. Do you really think that people want to go in and wonder what the president's going to say and how the markets react to it come Thursday? Is what he's going to say get attacked right after he says it by the Republicans? Most assuredly. What is going to happen with the Fed as we get later in the month? Are they going to do anything? Are they going to sit back and do nothing this time and again say maybe they have to watch what the economy is doing? We know that we saw German numbers today that were favorable. We know that Germany stepped into the marketplace via the court system today, their German courts, and said what they had done in the rescue package was deemed constitutional and legal. We also know that the courts made a strong recommendation, I might be law the way that I'm reading it, where to do further rescues there has to go a budget committee of some type, which means getting a group of people together to make a decision. Duh, that won't be easy. So when we see the next round of sovereign debt, you can count on it. I think the metal markets will come alive. Is this the right time for them? No. This is where you're getting the stock market traders. They're hoping, boy, the president's going to do something. They're saying, Germany, now they can put more money into a rescue fund. So that's the thinking right now, and maybe that carries for a little bit here. So you don't fight City Hall. Nothing has really gone away. It's just a phase. It's really that simple.